about the origin story of Gondi. How does a HFT trader and an economist come together? What was like the spring, the point where you're like, we want to, this is the great idea?
Yeah, so E and I have known each other for 15 years. We're very, very close friends, and we've meant to build something together for a long time. I guess it was never right place, right idea. We had different interests. You know, it's just like personal background on my end. As you said, like I'm an economist by training. I previously helped build a early stage VC fund. I ran that for about 4 years and then built a Web2 company. I had been playing in the Web3 space for a long time, but like never as a builder, always as a participant. Pretty much after selling my last company, I took a sabbatical and COVID hit, and I was pretty much, with a lot of free time in my hands at home. So started, I guess, going deep into the rabbit hole of digital art and NFTs. Initially, funny enough, through Axie Infinity. I'm not sure if you guys remember the game where you buy these creatures that were represented by NFTs. You would breed them and you could play with them to earn tokens. So we actually had like a pretty big operation within Axie Infinity ourselves. We had automated a bunch of those processes, but then we stumbled upon art blocks and art, and we found that to be very interesting. We started collecting ourselves initially through squiggles, and at some point we realized, hey, like we don't have infinite ETH, but we still want to keep participating and playing in the ecosystem and collecting. So we found other borrowing and lending platforms. So we started to lend ourselves, and the way we would see this activity would be we could either earn a nice yield on our ETH, or we get something that we would love to collect for half the price. So for us, that was an activity that we could do on an ongoing basis, get a nice return on our ETH, or keep collecting artwork that we really liked. So we started doing that with and we identified a few flaws in the mechanics or the design that we thought had to change for the space to grow. So that was pretty much the genesis of Gondi. We thought we could build a platform that was very borrower friendly, and we decided to go ahead and build it.
Wow. Yeah.
Why particularly do you think that lending on art on this like digital networks goods is so interesting?
There's so many elements why it's really interesting. I think digital art, in contrast to traditional art, not only is more liquid, but it's a lot more transparent. I think many people in our space are very familiar with digital art, but they're not as familiar with traditional art and how traditional art works and how opaque pricing is in traditional art. And when you think about how can I pretty much lend against a collateral that I understand the value, I think there are like not that many assets in the world that are as interesting as lending towards digital art.
Why do you think digital art is like has good intrinsic value compared to other DeFi products or other crypto products? What do you like? What is for you the springing point?
Yeah, look, the way I see digital art, I mean, like it's a Veblen good, right? And in some ways, I'm a purist in the sense that to me, the most obvious plays of the next decade are Bitcoin and digital art. I think crypto will continue to grow, and there are going to be like more applications, and it's not going to be, as we've seen, it's not rigid. There are going to be like many chains, many use cases, many DeFi protocols, and like each one with its own mechanics and its own dynamics. But like when I think about like what will the world 10 years from now, 15 years from now look like, I see Bitcoin winning. I see digital art as a consequence of like Bitcoin and crypto at large winning. I see digital art blooming. Not only because there's more capital coming in, but also because of all of the talent of the people in the space that are creating the art itself and are building the tools that people are using in the space.
And if I may also, because just to kind of explain in a like very easy way what the platform you built is about. So in the story you mentioned in the beginning, you were interested to gain like a yield on your crypto tokens or to buy a digital art for half the price. For me, this is a very simple explanation of what Gondi is all about in a way. You can get yield if you have assets, as in money, or you can, if everything else fails, pretty much, if you don't get your money back, you can get the artwork, which was used as a collateral for a very interesting price. Would that be the kind of summary of what this is all about?
Yeah, absolutely. That's a great summary. There are a lot more details and mechanics that we can dive into, but that's pretty much the essence. So I guess the TLDR is anyone who owns digital art or collectibles, they can use those assets as collateral to take out loans, and they can take out loans in ETH or USDC. So all loans are over collateralized, and this is called Lombard loans. I mean, it's been going on for a few hundred years now, since the Renaissance. And funny enough, like that's actually where the name Gondi comes from, actually. So when the Medici family was pretty much like pushing the art space in the Renaissance and commissioning all of this artwork and being like patrons of art, one of the Gondi family back then was the financing partner of the Medicis. And we thought that, that was a very appropriate name for what we wanted to build when we came into spaces. Gondi was like purely about borrowing and lending.
And in a way, you make this process very accessible, because to the best of my knowledge, which is far from advanced on the topic, but like being able to get a Lombard loan is usually reserved only to high net worth individuals through private banking. This is not like a financial product you can usually access for like a normal guy.
Yeah, you're spot on. I think when you look, these types of loans are very common in the traditional art world. However, they're only common for the very expensive top tier art. So obviously, if you own a Matisse or a Picasso or a Rothko, sure, you can go to JP Morgan private banking or to Bank of America, Sotheby's, Christie's, and you will get an asset-backed loan. There are a couple of differences. One is if you work with banks, the banks are only gonna give you a loan if they also hold millions of dollars of your stocks that you own with them. So yes, you get the Lombard loan, but then they also own a lot of other collateral. And that process usually takes between 4 weeks and 8 weeks. There's a lot of paperwork involved. Occasionally they take possession of the artwork, sometimes they don't. If you own enough stock, they will allow you to keep your Picasso at home. But most of the other segment of the art market, when it comes to like physical art, doesn't have access to these tools. And I think like that's what makes our space very special, where anything from an up and coming emerging artist and like a new collection can get a smaller loan, to some of the grails in our space can also get a loan. And again, like the process doesn't take 6 weeks or 8 weeks. It pretty much takes a few minutes. Like if you own a Squiggle or if you own a CryptoPunk and you come to Gondi, you pretty much get the USDC or ETH in your wallet within a few minutes. At any given point in time, there's 10 to 15 standing offers. So like that level of liquidity is unparalleled when we think about other segments of the economy or even traditional art.
And I was wondering, because from we discussed about the collector standpoint, about the lender standpoint. I mean, from the artist point of view, listening to what you just explained, I was like, oh, but maybe actually I could kind of use some of my work as a collateral. And then I was thinking, oh, but maybe if I'm like, let's imagine I'm working on a new series and I don't know, I need to purchase a robot and it's very expensive. Maybe I can have like the first work of the collection being used as a collateral, so I can have other people lending me money. So when the work is ready, I can either like get the money back to the lender, or I can give away, well, not give away, but just like let go the one. But in that case, I mean, who would decide? I mean, how do you decide the value of the work? I mean, because there's no appraisal, or is there, or how does it work?
Yeah, absolutely. So I think you touched on a lot of like very interesting points. First, let's tackle the appraisal part. So the way Gondi works is it's entirely peer-to-peer. So it's one-to-one. There's for every single loan, there's one borrower, there's one lender. There could be multiple lenders, but to keep it simple, the majority of loans are one-to-one. So you would come to Gondi and you would list your item for loan, and you only need to state, hey, do you want ETH or USDC, and how long you want the loan for. With that information, you're gonna get different offers from different lenders. Lenders range from individuals who are in it only for the yield. There's individuals who lend to own as a strategy, and there are also institutional funds who do this as their primary activity. So the appraisal is pretty much sitting on the lender side, and you're gonna get different offers, and if one of those offers satisfies you, then you can accept it, but there's no obligation to it. There's no third party appraisal because we think when we were designing Gondi, what made sense to us was the person who's lending you the money needs to be comfortable with the level of risk that they are taking. There are things that we have planned in the future to decouple the role of the underwriter and the capital provider. I think we'll introduce that when the market is more mature and when the market has grown. But as for the time being, it's a one-to-one relationship.
Do you think, how do you see the professionalization of the space? What do you think are the most interesting target market? Is it DeFi group, or is it more like institutional, like funds, or what are the biggest growth opportunities?
So the space has matured a lot, and it has matured across different. It has matured across on different elements of it. I think one part of it is who are these lenders and who are the profiles. And when we started lending ourselves initially a few years ago, it was mostly individuals. It was like people who were, partly speculating, partly collecting, but just, participants who were doing this on a very ad hoc basis. So there's benefits to that because people who lend to own understand the value of the asset. But then some of the drawbacks are if you borrow a loan against lender X and that lender X is just doing it for fun, and you take a 3-month loan, and upon maturity you want another 3 months, that lender might be on vacation and you might not necessarily get an extension, right? So it was a lot less reliable for borrowers, and maybe they wouldn't be able to get an extension and they had to repay the loan. The way that part of the market has matured is we've gone from people doing this on a very ad hoc basis and part-time to people doing it on a full-time basis, including some institutional funds. So this is all very public. Keyrock, who's a very large market maker, has a dedicated desk to lend on Gondi, and there are other funds and who are very active participants in the NFT space that also have dedicated desks that lend and do this on a full-time basis. So again, all of these institutional funds are constantly providing liquidity, they're increasing their book, and they are very flexible when it comes to extending loans. So right now you might come take out a 3-month loan against a punk and then just keep extending that every 3 months. So there's no need for you to repay the full amount plus interest. As long as the value of the asset has held strong over those 3 months, you would only need to pay the interest, and then you get another 3 months extension.
Because the overall amount that is lending NFTs that are lent out is extremely small. How much? Do you know how much the number is at the moment?
So at least on Gondi, there's about 1,500 NFTs. There's about in outstanding loans, which is very small. I mean, just think about the sheer number of 10K collections or 1K collections, or 100 item collections that are
it's
out there.
2% of the value or something like this.
Something along those lines. Yeah. Not of the value, but of number of NFTs. So if you look at the underwritable digital art market, are probably somewhere in the $8 to $10 billion value. And when you look at Gondi, value of the collateral in escrow is about 120 million.
Of which you obviously don't hold.
Which we obviously do not hold, yes.
As we said before.
Yeah, so yeah, I mean, Gondi is a non-custodial, it's open source code, and we don't own the art. So the way this works is when the borrower accepts an offer, they would transfer the NFT from their wallet to Gondi's escrow contract, and then they get the USDC, or the only wallet that is able to retrieve that NFT is the borrower's wallet up until maturity. If they fail to repay the loan upon maturity, then the lender's wallet is the only wallet that can retrieve that.
And what do you think is where do you have an estimation of the potential of the lending market? Yeah,
so we've always thought that somewhere between 8 to 10% of the market could be a good level for a matured market without becoming extremely over leveraged. And again, we're still way below that. And again, the interesting thing of the way they signed Gondi is that you never get these cascade liquidations in the market, meaning all of the loans are term loans. There's no oracle. So the only way for a borrower to lose an item is if they fail to repay upon maturity. And obviously, if there's 100 punks in outstanding loans. All of those CryptoPunks have different maturity dates. There's 1 month loans, there's 3 month loans, there's 6 month loans, there's like 1 year loans. I think we even have like a few 2 or 3 year loans outstanding as well. So it allows many participants to be borrowing against their assets without the risk of creating these cascade liquidations that we've seen in some other protocols.
So to go back to what you mentioned, we're just trying to make it very like simple for non-specialists. Let's imagine I have I have 100 USDC, and I'm like, okay, I'd like to like get some percentage income from it. So, and I have someone who has like an NFT valued at $200 US dollars. So I say, okay, I'm willing to give you 100 as a loan. Then the NFT of this person goes to your escrow account, and then I get like 5% like percentage income at the term of the loan. Or is this money coming into my wallet every month? How does it work?
Yeah, so interest are only paid when the loan position are closed. So borrowers are able to repay early if they want, or they can pay right before maturity. But there are no installments. It's just like a lump sum payment whenever you're closing, whenever you're...
Okay. And if, let's imagine the loan lasts like 12 months, the collector who has the NFT is like, oh, well, initially my NFT was worth $200, but actually now it's worth $10 because the market was crazy. What's going on here? Nothing, because the only repayment, when you settle the thing at the end, this is when like the dust settles and you're like, well, either, sorry, I'm not paying you back, you can keep the NFT, which is now worth $10, or you have the option to pay someone back because you say, no, I don't want you to lose money. I mean, how does it work for like lender borrowers perspective?
Yeah, so the mechanics here are basically the lenders are selling put options, right? So to describe that very simply is the borrowers have the option but not the obligation to repay, meaning that if the value of the collateral comes down, or if they don't have liquidity, or if they just simply don't want to repay, they have the option not to repay. We've seen many borrowers extending loans or repaying loans that would be considered underwater. That would mean the value of the collateral is less than the debt that they own. But in many cases, they still love the art and they want to keep the art, and they're like, look, I took this loan because I wanted to, I needed the liquidity, or I wanted to go long BTC, or like anything that you might think of. But that artwork is part of their collection and they don't really care and they're holding it for a long term. We've seen those cases. And again, like we also see cases where if the collateral is worse than the debt, the borrower just simply chooses not to repay. So in that case, obviously, all of the cost and loss of principal is absorbed by the lender.
Okay, so it's really going back to worst case scenario, you end up having an artwork at a lower price than you would have paid for it like 12 months ago.
Yep.
All the expected outcome is like you get your money back plus interest.
Correct, yes. So initially, and again, like talking about how the market has matured, early on you would see lots of default in the money. So what that meant was, let's say you owned a fidenza that's worth 30 ETH, you would get 15 ETH for it. And then maybe someone made a wrong bet and they put that 15 ETH in the wrong protocol. And then a month in, when they had to repay the loan, they didn't have the liquidity. So they just failed to repay. Now, maybe a month in, that fidenza was still worth 30 ETH. So the lender gave out 15 ETH and got something worth 30 ETH. That was like one of the things that we saw back in the day, and that was like very common. Didn't necessarily think that was right, so we introduced a few mechanics to change that. So, a few months ago, we introduced this concept of sell and repay, where if you take out a loan as a borrower, even if the NFT is in escrow, you can actually list it for sale. So in that case, if you let's say lost the 15 ETH and you have zero liquidity to repay back the loan, you could still put your fidenza for sale for 28 ETH or 26 ETH, maybe slightly below floor, so that it sells. And yes, at the end of the day, you lost, let's say, like 3 ETH of value, and maybe you're not going to keep the fidenza that you owned, but that gives you the liquidity to, hey, when the time is right, you can add a few more ETH and buy another fidenza. So that's an example of like how some mechanics that we've introduced to preserve value and also help borrowers and just give them the optionality. I think like the ethos that we've had from the get-go is this is and we strongly believe this, is that this is a borrower's market. And at the end of the day, you need to have borrower-friendly mechanics and collector-friendly mechanics to get the best artworks. Because only if you get the best artworks, the market will grow. If you get the best artworks and the best collectors, money will follow, and not the other way around. That was a fundamental flaw that we saw in some of the other protocols and platforms in this space, that they were all designed in a very lender-friendly way. And typically, it happens if you're talking about like ERC20s. That does not happen when you're dealing with digital art. The psychology and like the nature of the assets are just fundamentally different.
Yeah.
Let's imagine if we think about, I know like in traditional art world, you can do some kind of, I don't even know, like buy a small percentage of like blue chip artwork as a group. So this is not something you could do maybe today with Gondi, but maybe in the future you could say, oh, we are a DAO, or we are, I don't know, I'm willing to put 0.1 ETH to buy, I don't know, an X copy. And when we are that number of people, we make like a group transaction. Is it something you're thinking about, or?
So that's currently not possible. Personally, we haven't been fans of just fractional ownership, just because I think there's a beauty in like actually owning the artwork. I think many very talented people in this space have tried fractional ownership, and it has failed because it just feels different than, if you own 10% of a punk versus owning the punk. It's very, very different, and maybe it's actually a lot better to buy another artwork in full rather than 5% of a punk. So there are some mechanics on the loan side where you can get part of loan. So for example, the relationship between borrowers and lenders are not always one-to-one. What Gondi allows is it allows multiple lenders to participate in a loan by having different seniority tranches to each other, meaning that you can have, let's say, if punks are 40 ETH right now, someone comes, they get a 20 ETH loan for 90 days. And then out of those 20 ETH, maybe I want to be very conservative, and I say, hey, I'm going to put the most senior 15 ETH at 10% interest rate. And then maybe Nick is feeling a little bit more risky, and he says, fine, then I'll put 5 ETH on top, but instead of at that interest rate, I'll get 25% interest rate, right? So the borrower gets, I guess, like this blended of the two blocks, gets like, the 15 ETH from me that is, more, I guess, at a lower interest rate, plus the 5 ETH from Nick that sits on top. When there's a default in that case, the punk gets liquidated, and if the proceeds from the auction are not enough, Nick gets all of the losses. Why? Because he's a junior tranche in that transaction. So as a senior tranche, I would be protected in that case. So there are a lot of like very interesting dynamics between lenders that can come together, particularly for very large loans. Because if you're dealing with an X-Copy 101 or you're dealing with a zombie punk, I mean, not everyone has $500,000 that can lend out of the blue. Now, luckily, we do have some institutions that have the capacity to do that. But in other cases, we've seen individual lenders come together and crunch up in a way that each one of them feels comfortable and putting the money together for a big loan. So in that way, it's not fractional ownership, but it would be, I guess, like a fractional exposure to a loan that suits whatever risk profile that someone might have.
One thing that I wanted to ask is you made an announcement with new features. Can you just elaborate on what are the most important ones and why you chose those?
Yeah, so about a week and a half ago, we launched the buy-sell marketplace for Gondi. So now Gondi, it's not only about borrowing and lending, it's a full stack liquidity suite where you can also buy and sell. Pretty much like any action that you might want to have within the digital art space, you can do on Gondi. You can buy, you can bid, you can sell, you can borrow, and you can lend. The reason why we chose to go in this direction was because we saw that loans and the buying and selling market are very much related. More often than not, we would see people come to Gondi, borrow against their asset as a way to get a cash advancement and then list their item for sale. So that's, for example, like on the way out of a position, people would borrow to sell. And again, like in a similar way, more often than not, people would come, take out loans, and use those proceeds to buy new items that they want to collect. So again, like as we followed the on-chain activity of different users on Gondi, like they would be using Gondi to like as a way to sell, as a way to buy, and we thought that the space was very much fragmented and it made a lot more sense to consolidate that and put it all together.
Not a stupid question, but how easy it is for, let's say, a lender or a borrower to see the return on their investment in a way? Because if you have the digital asset moving in price, plus you have the interest, at the end of the transaction, do you have some kind of P&L where you say, oh, this is like your true yield, or is there such a thing?
Yep. So lenders have their own dashboard on Gondi. They daily stats in terms of how much they are accruing on a daily basis. They get stats related as to what's their realized yield, what's their unrealized yield, how much money they have in outstanding debt. So they get all of those elements to track. At the end of the day, I would say for lenders and participants, I guess like at least in Web3 at large, the lender activity is very much a boomer activity, right? Because I think many people in our space are chasing, the 10x, the 100x's. People who are lending on Gondi are getting 15 to 25% a year on interest. And again, if you make a couple of bad loans, that rate can actually drop quite dramatically, right? So whenever we see new lenders come into a space, the first thing that we tell them is like, hey, be patient, don't be greedy, don't make loans that you don't feel comfortable with. And it's a good way to get a steady 15-20% return in USDC, which I don't think there are many places in the world where you can get that. But at the same time, you won't get the X. It's a different activity. It's much more of a boomer activity within Web3, but that's the nature of it.
What features for users you like? Which ones are you looking forward most?
Yeah, so we also recently launched Insights on Gondi, which pretty much gives you a detailed analysis of how a specific collection has been changing, like the floor price, the top bid. It gives you information around recent sales, recent loans, and we will also be launching probably end of this week, early next week, Insights at a trade level. So that will lenders and will give lenders a lot more granular information and will help them underwrite better. Why? Because if you're lending against a hyper rainbow squiggle, those don't move that often. And if someone comes and is asking you for a loan against a hyper rainbow, you will need to go dig into activity on Gondi, on different platforms, and just try to understand, hey, have there been any OTC sales? What has been the floor and the top bid history for this specific trade? So we're pretty much just packaging that in a very easy and intuitive way to for users.
I believe there is also the concept of a broker commission.
Yep.
Could you let us know a little bit more about?
Yeah, absolutely. So this week we launched the option of adding broker fees to a sale, as well as royalties. So both of these are at an optional capacity. Royalties because we wanted to make sure that we had royalties optional. It's very important for many artists, and we thought that was the right thing to do. On the broker fee side, seen I guess in the first half of the year, many very large transactions being brokered by Eli and many other people in the space, and we think that brokers serve a particular part of the market, mostly high end of the market. We see a lot of overlap with some of the loans that happen on Gondi. So the way the broker fees work is anyone who's selling a particular item can just add their broker's wallet, add the percentage that they are paying, and then once that item sells, all of the proceeds get distributed. It goes obviously to the seller, part goes to the broker. Yeah, Gondi doesn't charge any fees as of now. Again, it's pretty much understanding who are the different participants, because brokers have very different needs from collectors, who have very different needs from borrowers, who have very different needs from lenders. And it's really the way we're building Gondi, and our vision here is there are many different types of participants who have different needs and need different tools. And we want to be that place and that home where all of these different people in our space can find the tools that they need to reach their full potential.
That's really cool.
Point is, in terms of strategy, you went from strictly a lending market, hyper financialization of art. You made like a really good statement there, and now you want to take more market cap of the entire digital art space, where you're also a trading or a buy sell platform. You're also taste making platform, or maybe put art more in the forefront. Am I reading this correctly?
Yes, and I mean we're right now like aiming to be the full stack liquidity for the digital art space. I would say our strategy is very different than OpenSea. We like those guys a lot. We know many of the people in their team. We're friends. They are kind of like the aggregator for everything across different ecosystems, doing tokens, doing I guess like NFTs, doing art. Well, our strategy is just focusing on the digital art space and going deep into it, building more tooling, building more curation, building discovery tools, which all of these things will be coming to Gondi over the next couple of months. But essentially, we want to serve the market that we've been serving from day one. It's not really changing strategy. When we started Gondi, we pretty much focused on two collections because those were the collections that we liked the most, and we were collecting, which were like punks and squiggles. And for us, it was more like when we came into let's say like borrowing and lending space, you had about 10 different platforms. Right now, Gondi is by far the largest. We have about 60% market share overall and about 90% market share for USDC denominated loans. But when we came, we were the new kids in the block, and pretty much like the way that we've been able to grow and gain market share has been by going deep into specific communities and talking with like every single punk owner, every single squiggle collector, understanding their needs, understanding what is it that you need, what are the tools that you're missing, and again like getting into like buying and selling. For us, it's been a very natural extension from borrowing and lending. It's not that we were thinking about doing this when we launched, but it was more about as we saw what people were doing on chain and as we talk with users like every single day. It was very obvious, if we create a cohesive experience where we put like buy and sell and loans together, and we make all of these flows very seamless in the same platform, it will make users' lives easier. And we thought that made a lot of sense. And I guess like many of the developments that we have coming up have also come partly inspired by people that we've met in the community and other users that we've talked. And I guess again, I don't want to give too much away, but it's no secret that the way we consume digital art is fundamentally broken. I don't know about you guys, but like I wake up and I open up 8 different platforms and websites, and like information is like all over the place. There has to be a better way to consume and interact with digital art. We've come from the interacting side on the debt side, on the credit market. Now it's been now we're focusing a little bit more on the buy sell, but it's really about giving that dual perspective on how do I consume art that I love, and then like how do I interact with it.
Like you say, it's fundamentally broken. I think for me, one of the fundamentally broken things that there's no new people coming to the space. And obviously I think how it works, like with most things in life, first you create you act professional and you create the solution, and then people will come. What types of targets do you think will be attracted to this? What is in your opinion?
Our journey has been very much, I would say like the opposite, where we started with probably the most sophisticated users who are, not only collecting, but are thinking about the credit market and like future market of like a specific artwork and are like lending. So we've come from very, very, very deep into a rabbit hole, and like we're coming up the funnel. I think there are different things that we could build in a space that would make it easier and more accessible for new participants or new entrants. The reality right now is everything from creating a wallet to like understanding where to trade to even having a notion of, hey, I don't want to come and start buying digital art and be, the only dumbass who's like buying a specific collection that like no one cares about, or overpaying for a specific artwork, right? So like how do you give people, and I guess like new users, that information? Again, like I think we're very far still for us at Gondi to do that. But I think there are many things like both on the discovery, on the curation side, on the onboarding side that could be done to get new participants. The other thing that I would say is like when we look at I guess like pricing action, and we've been talking a lot about the financial aspect of digital art. I think the fact that price is so transparent is very good, but it has a drawback, which is people are looking at prices like every single day. And at the end of the day, like digital art is a very big cultural movement, and like you cannot push culture to go faster. You can just like make sure that these assets have the right platforms, the right tools, the right access to liquidity. But culture takes time, right? And I think like as we've seen with different art movements over different centuries, it takes years. And I think the space is still relatively new, and I would say. Again, like coming from venture and I made investments like a seed stage 12 years ago, and I haven't seen them materialize, and some I have. It takes patience. It takes time, and I think like if people expect to come in and everything to start blooming within a year, like unfortunately that will not happen. I think if there's one thing that I would want to see more in the space, is just like long-term thinking and patience. And I think. When you look at, again, like I think sometimes we're like too into the weeds that, or at least like talking for myself, like you lose perspective of all of the amazing things that are coming out. But like if you would just like pause for a second and think, hey, like what have been amazing new collections that have been coming out every single month? I mean, there's like at least a couple per month that you can point out, for over the last year, and you can keep doing the same thing as you move backwards. I think it's like obviously we want the space to grow faster, and like we want price action to to recover. I think that's one thing that like everyone in their space really wants. But I think it's a combination. It's a combination of time. It's a combination of having the right tools, and as you said, I think also like bringing new participants in the space. Those things, I think, like for better and for worse, just take more time than what some people.
It's great to have people like you and the platform you created to contribute in, well, for me, it's like a kind of unexpected way to the art world in general, because usually you don't think about like loans as a vector of like building the art community, but I think you really do, because buying something and knowing that you can use it as a collateral or sell it in like a more like in the market where there is some velocity, it's quite reassuring, I would believe. So it's quite fairly advanced. I have no idea how long it would take to go to Bank of America, get a Picasso appraised and get the money in the bank. But I suspect the cost of this would be quite high and the time involved would be significant. Where with Gondi, I'm sure it can be like a matter of hours, depending on.
Yeah, I think what you just said is one of the I would say like best arguments for the role of the debt market in digital art. The way I see this is, let's say, obviously, if you were to buy a Picasso, sure, you can get a loan in Bank of America or JP Morgan, and it will be painful. It will take a long time, but you will get it. Now, the thing is, if you are buying physical art out of an art gallery, out of Chelsea, New York, or London, like where the average price might be $10,000, $50,000, there's no loan market for that. There's very little to no liquidity if you ever want to sell that. Now, so for new people in the space who are coming in, who are thinking, okay, I want to buy some art because I love the art, and they're thinking, what percentage of my net worth should be allocated to this versus my house versus Bitcoin versus stock versus like meme, anything that you want. People usually think, okay, like I own this much and this is my net worth and I'm going to allocate a percentage. Now, if you don't have a way out or you don't have a way to access liquidity, you're going to allocate a way smaller percentage. Now, if you know that, hey, I can buy this art and I know that this is great art, that the price will somewhat hold, might go up, might go down, but like it will hold some value, and I know I can access liquidity by borrowing on Gondi, then again, like it justifies having a higher percentage of your net worth in art. Why? Because, hey, like, contrary to some other assets, you can just like borrow whenever you need to. Yes, I mean, there's a cost to it, but like, again, like it gives more flexibility, and I think it gives some confidence to collectors that they can allocate a higher percentage of their net worth to collecting art or holding art for longer. I mean, one of the things that we see at Gondi, very often is people who need liquidity who took loans on Gondi. Otherwise, they were planning on selling the artwork. So,
And which, if
because
I may
life
interrupt,
happens.
in
Yep.
this situation, you might end up selling the artwork for a very low price. So it's not good for the artist at the end of the day, because you're like, your price point for this series. I mean, if you had like a panic sale because someone had like needed liquidity, as an artist, you are happy that you have platforms like Gondi to be able to kind of mitigate this kind of big drop. So yeah, well, it's just my point of view. But
Yeah, no, I mean, I fully agree. I mean, like, at the end of the day, like, you don't want people to fire sale. And again, like, that's why the combination of the selling element and the debt element play hand in hand together, and people would come borrow as a way to get a cash advancement and then list the item for sale and then sell it over the course of like 2 months, 3 months. Again, like, if you're selling a zombie punk, I mean, like, those don't move very often, right? Like, if you own a zombie punk and like, you want liquidity right now, as you said, you're gonna sell it at a bad price, or you're gonna sell it for way lower than what it's worth. So again, like, having this combination, and at least there's possibilities. One, like, prevents fire sales or avoids fire sales, and then, like, yeah, it just gives collectors more optionality and flexibility.
One thing, you had some milestones regarding funding rounds and stuff. Are you okay to talk about that? Not really.
We can talk about it. Yeah, I mean, we raised about I think like over 8 million from some great people. We raised from like Dragonfly, Pantera, Six Man Ventures, and then we also got some community members from our space, and from Seed Phrase to like Phantom Scribbler to Tony Herrera, G Money, and yeah, many people who have been great and have helped us from the get-go. Luckily, we're in a position where we have like many years of runway, so we're not looking to fundraise anytime soon.
changing topic, if I may, let's imagine if an artist or a collector, or just like, I don't know, like an investor, I mean, if they want to know more about the project, or if they want to like discuss about with the community, what would be the best way to connect?
Yeah, absolutely. So they can follow us on X at Gondi XYZ. The platform, the website is gondi.xyz, or they can hop onto Discord and talk with someone from our team or ourselves, and we'd be more than happy to walk them through the ropes and explain the details on how everything works.
The last thing I want to ask about is your prediction on the future. Do you think lending will have a significant impact on the NFT market? Like, can you see that at 10-20% of assets being lent out, that it will push prices up of certain collections significantly?
I think it's very hard to say. We think that having a very healthy market helps the ecosystem at large. I don't necessarily think
is there such a thing in 25 as a healthy market?
We're trying,
whether it's crypto, stocks, or whatever.
Yeah, I mean, we're trying to build it at least on Gondi. I would say like the digital art lending market is pretty healthy, but very small yet still. So we're looking to grow that. I don't necessarily think that more loans means higher prices, and I just want to make that clear for everyone. I think that having more access to liquidity, I think there's a benefit that it just gives more optionality. It connects the digital art market to other parts of crypto and DeFi. Why? Because like as you said, Nick, like yes, we need to onboard more people. More often than not, when you see like loans or sales, you're like, hey, like it's the same people, buying from each other over and over again. Now the thing is like, how do you connect the value that we have in our space with DeFi at large? Okay, like if you have Punk and you borrow USDC, okay, then you can get the USDC and you can go to Athena, you can go to like Hyperliquid. Like it connects the digital art market with like crypto at large, where more like oftentimes collectors in our space are again, like just moving within like a very small, in a very small corner of of crypto. So I think like that's one of the benefits also like the loan market. It creates these bridges between collectors and the digital art space with crypto at large. And again, like the bigger the penetration there is in the debt market, the more money flows in. You're gonna see, I guess, like lenders make more money, and then many of these lenders are collectors who end up buying more art. Yeah, so I think that there is some correlation. I don't want to say, and I don't necessarily think it's a case that hey, like more loans means hey, like higher prices, but there are many benefits here, and I think that's what we intend to push and see the space moving.
Cool. I think this was pretty much it from my side. Jean-Jacques, you have anything else?
I could, but no, I asked all the most burning questions, and thank you. It has been extremely helpful. But I went back to it. I was a little bit as like a non-financial guy. I was like, wow, this is looking interesting. I was not sure I understood everything. You clarified, like first, I mean, your vision. I mean, how you and why you created this platform, and to me, it summarized everything. And I guess the best way is to give it a try and asking questions if you are afraid, like as me, like doing a mistake or something. But it's very fascinating, and I completely had no idea about all the potential benefits your solution provides, way beyond the financial aspects. It's like there is like a ripple of beneficial things for collectors, for artists, for galleries also potentially, because you give like a secondary market to artworks which had none. So yeah, it's fascinating, and I'm really looking forward to see how you grow in the future.
Thank you guys. It's been a blast. Thank you so much for having me.
Yeah, I mean, we sort of hit like the apex of topics like generative algorithms, digital ownership, art, and now you're adding like finances and like debt.
Yep.
That's like, crypto is pretty financial, but this is like taking it to the next level.